Welcome back to the Prajna series. In this episode, Rajesh V. George will focus on the annual return under GST, a comprehensive filing that consolidates the financial and transactional data for the entire financial year.
Now, in a financial year, the sum total of the transaction that is there in 1, 2A, 2B and 3B in whichever form that the 9 is actually is collated together. It is summed up and it becomes an annual whatever is the data. So what happens, what I'm telling you is whatever information in April 2024 till March 2025 R1, sum total of that auto-populates into the respective tables into the GSTR 9. So I will just talk to you about the respective tables that are there in GSTR 9. We touch upon that and I'll give you a few other example information that is there, and then I think we wind up the session. Now, first of all, GSTR 9, to just give you a brief understanding, it will be under section 44, read with rule 80 is my understanding. Now, annual returns, you have annual returns for a registered person, for a composition levy person, and then you have for TCS. This 9B, I don't think works this one. 9A also, I think, annual, because if you remember, the composition levy person also files GSTR 4 on a yearly basis. In addition to that, he is also required to file a annual return in the form GSTR 9A. But till date, one of the facilitation measures that have been provided, I think till 23, 24, 24, 20, 24, 25, I don't know, it is not there. Till 23, 24, what is one is, the government has put in place what is called as, if your turnover is less than 2 crores, if your turnover is less than 2 crores, you have an option not to file the annual returns. That is, in case of a normal taxpayer, GSTR 9, who files a GSTR 9, if his turnover is less than 2 crores, it is optional for him to file a GSTR 9. Now think about the perspective from a composition levy person. His turnover is generally actually less than it has to be less than 1.5 crores. That it is very much less than 2 crores. So it is totally optional for the composition levy person also. With reference to 80D 9B, I think it is not yet active on the system. Annual returns are to whom it is not applicable, despite the fact that annual returns are not applicable to the ISD TDS person. It is not applicable to a non-resident taxable person. And if you remember, the casual taxable person who files a GSTR 1 and a GSTR 3B, the annual returns in GSTR 9 is not applicable. Now, what I just want to talk to you about, give you a brief about the annual returns that is there. Now, it is again in the same order. It is not to be filed by, remember, NC, no ITC, composition, non-resident, OIDR, ISD, TDS, TCS don't need to file it. In addition to that, even it is not applicable to any department of the central state government, a local authority whose books are audited by the C&AG. So this is not, despite the fact that you have one of these companies who are required to file a GSTR 1 or a 2A or a 3B, annual returns in GSTR 9 is not applicable to government departments. It can include a reconciliation statement in the form GSTR 9C. It's a now one. The GSTR 9C, which is a reconciliation statement, I think for till 17, 18 and 18, 19, I think, it had to be certified by a CA, and post that it could be a self-certified. Now I think the reconciliation statement, I put it down here. If your annual turnover is greater than 5 crores from 21, it is self-certified. If your annual turnover is greater than 5 years, say for 18, 19 and 19, 20, it had to be certified by a CA. For 17, 18, if the annual turnover is greater than 2 crores, it had to be certified by a CA. This is the change that has been provided in I think rule 83 it is said. Now, is there a due date? It's very much, there is a due date. So if any financial year is there, if I say 23, 24, then the annual return has to be filed before 31st of December 2024. This is what I actually explained with reference to less than 2 crores. The slide is not so very clear, so please bear with me. It's same thing what I explained to you, that if it is less than 2 crore turnover, it is optional. And here what I've done is I've highlighted the various notifications for you to go back and look which notification actually tells you that if it is less than 2 crores, you don't need to file. There's a circular also that I've included there. Is there a mandatory requirement for filing your GSTR 9? Yes. Your R1 and 3B should have been filed for that particular financial year. If you have not filed it, it doesn't allow you to file. No. Is there an option to rectify error? No, there is no option to rectify an error. Now, what happens that, at the time of doing your annual returns, you find that, you missed out paying some particular liability, or some reversal needs to be done, or whatever it is. Now, annual returns has a mechanism in place to ensure that the liability can be paid, and this has to be paid through a DRC 03. And one of the conditions, it's again debatable between the taxpayers, and there are many contra views on that. I'm not going to get into it, but one of the conditions for payment under the DRC 03, that is, if there is any additional liability, it has to be paid only from the cash ledger. As far as the department is concerned, it has to be paid from the cash ledger. Now, this is the threshold limit that I have put here. Aggregate is one, optional to file. If it is less than or equal to 2 crores, it is optional to file. If the aggregate is 1, if it is greater than 2 crores, less than 5 crores, GSTR 9 is mandatory, 9C is optional. If it is greater than 5 crores, both are mandatory. Only thing is, you need to respective years, whether it is self-certified, that is a reconciliation statement, or it has to be certified by a chartered accountant, which I've already told you. Now, this is where I want to do this one. I actually wanted to use, I'll use the board also to go back and tell you the tables as to where the data flows. Now, the GSTR 9 has 6 parts. Even if I were to not ask you this particular, show you the slide, if I told you that it sums up the data from the GSTR 1 and the GSTR 3B, and if I were to ask you, and it is divided into 6 parts, what are the parts based on which it is, what are the parts that can be that constitute the 6 parts? If I were to just ask you, and I just were to put this into a board here, let me just try to, before I go into the slide, let me just try to tell you that, it has 6 parts. It has part 1, part 2, 3, 4, 5, and 6. Part 1 is nothing but the general information. Name, GSTIN, period, financial year. So that I think is 1 to 3. That is table number 1 to 3. The second part is, it sums up the details of outward supplies. Now, in respect of these details of outward supplies, it breaks it down into 2 parts. What it does is, it says that in respect of outward supplies where tax is payable, that is coming under table 4 of your GSTR 9. Tax, no tax, or no, I wouldn't say tax, tax, or it is my reverse charge supplies, that is, I made a supply where the recipient needs to pay tax, or for that matter, it is exports without payment of tax, it is supplies to an SEZ without payment of tax. All those details get reflected in a table 5. Now, part 3 pertains to inward supplies. If you remember the inward supplies, that means the input tax credit. Now, when you say outward supplies, you need to remember with reference to your liability. This is your liability, and this will be a liability, and this will be, part 3 will be with reference to your input tax credit. Now, inward supplies actually has table 6, table 7, and table 8. Table 6 is actually what is called as the ITC available. Again, you have to keep it in your minds that, it is a sum total of the whatever entry pertaining in table 4 of your GSTR 3B, or something that is pertaining to R1 of your one for the financial year. Table 7 will be with reference to the reversals. And here it does what is called as a reconciliation. It does a reconciliation between the credit till I think 22-23. Till 22-23, it did a reconciliation between the R2A. This actually created a lot of issues. There were a lot of challenges that were there. Till 22-23, it did a reconciliation between the R2A and the credit that was availed. Now, here in this particular one, I just want to highlight this fact also, is that initial stages when there were challenges with reference to this table 8, especially this table 8A and various tables that are there in GSTR 9, there are a couple of press releases that were put in place to say that, if there is an error, it can be condoned sort of this one. The press release details also, I have put it down into this PPT. It is very much available there. So I think you should actually also focus on those press releases, what it tells you with reference to it. Now, this R2A and credit avail reconciliation, I think, is still 22-23. And from 23-24, it is based on the R2B. Again, you will have to visualize this. I told you that it is a sum total of the data that flows from the R1, 2B, 3B, 2A. That means the respective table that we spoke about, spent so much of time discussing and making you understand also, is actually flows into this, into the R9. Because what I want you to appreciate the fact also is, based on the R1 and the R3B that is filed, the system itself computes or it auto-populates the GSTR9 based on the logic, based on the data flow, which is again editable. That is the biggest challenge, because all these returns as till date are editable in tables. Going forward, I'm sure that that also will be hard-coded, and I think it will facilitate compliance a little more, is what I feel. Now, part 4 is with reference to the tax payment. Now, visualize with reference to, I told you about the amendments. Amendments in respect of any particular financial year. Like if you say financial year, R1 or whatever amendments that you do. I said that if it is for 21-22, I told you that the amendments can be done till 30th of November 2022. 22. Or if I want to change, make it 23-24, it will be till 24. I can make those ones. So that means what happens is, this is spread over 2 particular parts of the financial year. That is, this actually includes this 30th November, if you go, it includes amendments that can be done in 23-24, or it also spreads into 24-25. That is April 24 to November 25. So all amendments that I make with reference to my liability, this particular one is payment of tax, will be table 9. Part 5 is with reference to all those amendments that are carried out between April of the next financial year, April of next financial year, to that due date, end date. So that gets reflected in actually a table, which is actually table 10 to table 13. Table 10 to table 13, and it also has a table which is actually table 14 if there is any differential taxes paid. Finally, part 6 has miscellaneous details, like for example, the adjudications done or the show cause notice pending, I think is there. The refunds claimed details are there. Then you have the HSN-wise summary of outward and inward supplies. So table 15 to 19 is the second part or the last part of the GSTR9. Now this basically is your GSTR9, the form that comes. Again, you need to visualize this aspect that data is first of all auto-populated by the system, and data has to auto-flow from the respective GSTR1, 3B file for that particular financial year, and 2B. So basically, this is what I was telling you, and if you see, there are 6 parts that are there. Part 1, Part 2, Part 3, Part 4, Part 5, Part 6 that is there. Now, basic info, liability, input tax credit, tax paid and tax payable and paid details, and any amendments that are there, UKS1, table 14, and other info gets covered under table 15 and 19. Now 9C also has about 5 parts. I don't want to, because I'm not very sure about this 9C, because it would be more ideal that a 9C reconciliation is spoken by a chartered accountant. It makes more sense, is my understanding. So, but limited information that I have, 5 parts, there are 5 parts and 16 tables, part 1, part 2, basic information, turnover details. Now, only thing that you need to remember is 9C is a reconciliation between whatever is the annual returns that has been filed, the data that is there, based on the R1, 2B and 3B. It is reconciling with the respective financial statements. So this is how the information is captured, and these are the various tables that are there. Now, as I told you that it gets auto-populated, the 9 and the 9C. If you say NIS1, you have annual return and you have a reconciliation statement. You have prepare online, prepare offline. Now, what the system does is, it has 4 options. See, download GSTR9 system computed summary. That is based on the R1, 2B, 3B that is there. Information is already auto-populated. You want to compare it with the GSTR1 and the IFF that you've already filed, it allows you that particular summary details. If you want the 3B summary, it gives you there. Finally, if you want to download only 8A. I told you 8A is a challenge because the 2A is a dynamic statement. It can move from various periods of time. And 8A was auto-populating only till I think 1st of May of the following, whatever R1s pertain to 1st of May of the next financial year. There was always a gap between the R2A and the information, the R2A entry and what was auto-populating here. So it gave that, to settle that dispute, they also gave this table 8A information. If you see each of those tables that are there, up to table 19, wherever it is there, if you see here, the respective tables are auto-populated by the system, which means that the data that is there in your GSTR1, 2A, 2B, 3B is the basis on which it gets auto-populated. That means the data flows from R1, 2A, 2B, 3B. We had a very thorough understanding with reference to R1, 2A, 2B, 3B in respect of that those tables. And I will make an attempt to at least try to put it on the board as regards the table, which table flows into the R9. But in case that doesn't happen, what I will leave you with is a screenshot that is there with reference to which I have actually written it down into a particular page, which we will put it on the screen as a PDF towards the end, wherein data from table from R1, which table from R1 will auto-populate into GSTR 3B. I think I missed out putting the 2B entries, but I'm sure that you will be able to do that. And which table from this actually auto-populates into the GSTR 9. So it will take me at least, if I were to transcribe that into the board here, it may take me about half an hour, which I've already done. So I'm just going to put that as a screenshot. I leave you also with a couple of other things is that, just that I've always believed that, memory is very short. Maybe some of you have clearly grasped whatever I've spoken in this one, though it is a longer session that is there, and you feel that, okay, I have understood. But if you do not relate back to the tables or you don't keep trying it out, which table is actually what. So what I've done is I've put down a small exercise for you, which is again part of your study material. I've just reflected the various types of transactions that are possible, like, invoice number 1 to a registered person who is an SEZ. Which table will it flow into the GSTR1? So that is an exercise that I've just put it down. So what I would request all of you to do is that, I have tried to put the table, I have built the table only for the GSTR1 entry. After this particular session, if you are interested, keen on further that learning that is there, I would request all of you to look at that exercise, put down the respective tables that are there for the GSTR1 against a particular transaction. Visualize which of the table will auto flow into the 2A or 2B. Create a separate column for that. Then which table flows into the 3B and which table will flow into the GSTR9. This is an all-encompassing data flow understanding exercise that is there. Again, an optional feature, optional aspect. It is part of your study material. Now, as I said, it auto-populates into all these tables, and this is how it auto-populates. If you see this particular here, this is where I want you to look at this particular entry. Now, visualize this particular entry. Instead of writing on the board, I think I'll use this pen here itself, so that it becomes easier for me also to remember some of these entries. Look at this first one. Now, this is table 4 of your GSTR9. Table 4 of your GSTR9, it says 4A. That is 4A, where does it auto-populate from? It says supplies made to unregistered person. When you say supplies made to unregistered person, if you recall, there is B2C large and there is others. Now, B2C large 5, others 7. If there is an amendment pertaining to the same financial year, that is, the amendment has been carried out in the same financial year and it is not in the next financial year. I told you if it is the next financial year, it goes under table 10 to 13. If it is in the same table, I think it will come here as 9A. And this will be 10. Similarly, supplies made to a registered person who is a B2B entry. If you look at this particular category, it is B2B entry. Now, B2B entry will be which one? When you say B2B entry, it means registered person to another registered person. For an SEZ, it is there separately. Registered person, you will say SEZ deemed exports and others. Now, deemed exports also has a separate entry. So, this entry will actually flow from table 4A. And any amendment made in that particular financial year under table 9A. Now, zero rated supply, export and payment of tax except supplies to SEZ, table 6A, 9A. SEZ, 6B, 9A. Deemed exports, 6C, 9A. Advance on which tax has been paid but invoice has not been issued, not covered under A2A. That means there is an advance received, receipt voucher that has been issued, but adjustment has not happened because the invoice has not been issued, supply has not been happened, 11A, along with its amendment. Inward supplies on which tax is to be paid on the reverse charge basis. Where does it come from? Now, this is where you are paying the tax on a reverse charge basis. That means it flows from your R2B now. It flows from your R2B 33. Subtotal of all this is an entry here. The problem is when you write here on the PPT, it gets erased. So, now the next part of it. Credit note, debit note, 9B and 9C. Debit note is one. So, split of whatever is for credit note, whatever is for debit note comes here. Now, you have made an amendment. Okay, I have to stand corrected here. I put 9A also here. It is not correct. The amendment entries are made separately here. So, these will be only the respective invoice entries or the data, original data entries. Amendment entries are separately reflected here. Now, go back into the next part, which is table 5. I told you that table 5 is with reference to supplies on which tax is not paid. The first thing that comes to your, which you will see on your screen is exports without payment. Exports without payment will be table 6A. Out of this table 6A, whichever is without payment will come there. SEZ, table 6B without payment will come under SEZ, this one. So, like that, now you have exempted, nil rated, non-GST, and you have the third category. If you observe, if I make a supply which is chargeable to reverse charge, I will reflect it under table 4B. That means I do not pay the tax. For me, it is nil. It is exempted. There is no tax. No, that means I've made a supply, but it attracts tax under reverse charge. That also gets reflected under table 5C. With reference to your input tax credit, I told you 6, 7, 8 is with reference to whatever is there on your whatever is there in your available part will come under table 6, reversal part will come under table 7, 8 will be a recourse statement that is there. Now, if you see here, there is inputs, capital goods and input services. Now, there were a lot of challenges, so the government has given that relaxation till some particular period of time, that if you are unable to split it into capital goods and input services, over a period of time they have reduced that relaxation, and certain tables you need to show the full information. In respect of that details, inputs, capital goods, input services, they have to be separately shown. Now, what does 6A start with? Whatever is the taxpayer's sum total of the 3B in table 4A that is available is now auto-populating it. This is an auto-populated entry. This is auto-populated. 6A is auto-populated. Now, what it does is 6A is then now that's an auto-populated entry. This is also now based on whatever entries are there in the 2B and which is a user entry. This cannot be edited at all. These are all, despite the fact that it is auto-populated, they are editable entries. Now, what is inward supplies other than imports? Inward supplies liable to reverse charge but includes supplies received from SEZ. It is nothing but table 4A5 of your 3B. Inward supplies received from unregistered person liable to reverse charge. All the both put together from unregistered person and from registered person, reverse charge, both put together will be 4A3. If you remember, 4A3 has a component which is actually auto-populated from your 3.3 of your 2B. If I have to move to the next slide, I have to erase that. Import of goods, if you recall, it is actually coming in from 4A1, 4A2, 4A4, That is 4A1, 4A2, 4A4 of your 3B. Amount of ITC reclaimed other than BA1. Now this is where you need to remember that after there is a possibility that there are temporary reversals. You reclaim that so that you have matching. It matches with the data that is there. You have to show it here. B to H will be, that is whatever is the that is under available category. It breaks up into that, and this total comes into this table 6I. I told you that 6A is auto-populated based on whatever is the 2B entries that are there or 2A entries that are there. It based on the 3B, table 4 of the 3B. Now, it matches with the breakups that have been provided. If there is any difference, it comes here under this. If when GST came in, there were these transitional credits. At that time, there was a Tran 1 and Tran 2. Subsequently, there have been certain litigations also. There's one, those details gets comes one. Any other ITC available but not specified above, it can come here. Like for example, I think there is this ITC 02. When there is a merger, demerger or whatever is there, the credit from one unit to the other gets done through an ITC 02. That gets reflected here in this. Sum total, it gets covered here. Total will be here. 7 is with reference to the reversals. If you remember, in the permanent reversals, it was 38, 42, 43 and section 17.5. For whatever reasons, 37, if you remember 31, 37 was a temporary reversal. 39, I don't remember what is 39, 42, 43, 75, transition, these are the reversal parts that are there. The challenge actually came up with reference to table 8A. 8A is auto-populated by the system. It's a non-editable entry. And whatever is the sum total which you had in table 6B and 6H, whatever was there, gets auto-populated. These are non-editable entries. Now we try to reconcile with reference to whatever is available. There was any credit that was taken in excess. This always led to a mismatch. There is a press release that is there. I would request you to keep that in mind when you do this reconciliation. 9 is with reference to the tax payable and the taxes paid. Where it is paid through cash, paid through ITC, whatever is there, it is coming there. Now here is where I want you to remember this 10, 11, 12 and 13 that is there. I told you it is with reference to for the financial year declared in returns of the next financial year. That is, if it is 23-24, it is reflected in April 24 to November 30th of November 2025. Whatever is there, those corrections will happen here. 10, 11, 12, 13 will be there. 14 will be the differential tax that arises because of this. If you are going to pay that, there is one, it will come under 14. 15 is with reference, I told you about the refunds claimed, sanctioned, rejected, pending, taxes paid and all that. You have 16 with reference to composition, supply, job worker and all that. 17 and 18 is with reference to your HSN entries. And I think that's one more in a table was a 19. I think I don't know whether 18 is the last table. Anyway, we'll leave it at that. I think we just come to the conclusion of this particular topic, this particular session. I just want to leave you with a few talking points that are there. I just want to leave you with a few talking points that are there to keep in mind as to these are also required to be kept in mind when you do your have an understanding of the GST, the returns that are there of a normal taxpayer. The first part that you need to remember is that there is this aspect of calculating interest in respect of delayed payment of tax is something that Section 50 of the CGST Act has continuously changed over a period of time. You need to keep in mind that you will need to get the latest part. I'm not going to focus on that now. Now, TDS and TCS credit is something that I told you that it auto flows into the GSTR 2A through the Part C. But actually it has to be claimed by the taxpayer through filing of a particular form, which a screenshot of it is what I will show you. Now, there is a couple of circulars which have been, in the GST 2A, 3B mismatch has been a very contentious issue all along, and there was a lot of effort and work that has gone into that person. Circulars 183 and circulars 193 puts to rest many of those challenges that are there, something that you will keep in mind. DRC 1B and DRC 1C is something that I told you with reference to Rule 88C and 88D. There is a GSTR 1, GSTR 3B mismatch. There is a GSTR 1, GSTR 3B mismatch. DRC 1B is issued. there is a GSTR 2B, GSTR 3B mismatch, there is a DFC 1C that is an issue. You need to just keep that in mind, follow it. There are these scrutiny parameters, there are a couple of scrutiny parameter instructions that have been issued, I think for 17-18 and then for the subsequent period 18-19, you just have to keep in mind of that as well. Now, there are the circulars that have been issued with reference to returns as much as possible. I think till a couple of months back at least, or maybe till the last month, I've tried to put down all the circulars that are there for this one. That is there for your information. You need to keep in mind that these circulars are there. Now, this is the TDS and TCS. How do you reclaim? The taxpayer has to go to this one. He has to prepare it, submit it. Only then the amount that is there in the TDS and the TCS flows into the electronic cash ledger. Again, for information. Despite we say that it is auto-populate, it actually needs to claim it. 88C and 88D, DRC 1B and C, I've just tried to put down as to how it comes for the taxpayer. There is a liability mismatch. When you say a liability mismatch, it is an R1 3B mismatch. When you say it is an ITC mismatch, it is a 2B 3B mismatch. So he needs to respond within 7 working days. He has to give a reply, or he needs to pay whatever is the difference that is there. Now, from a department perspective, I just want you to think about this. There is a mismatch on this, and every time he replies, just imagine the additional work that we're going to end up, having to go check whether that reply is correct or not. It's going to be a huge challenge. Hard coding of that information from the R1 and the R2B into the R3B is the only solution going forward. It is just an opinion. Now, I just put down the respective provisions, and I told you that there is this 2A 3B mismatch that is there. 2A 3B mismatch, there is this circulars that have been issued. I came across an interesting audio video that is there. It's again part of your study material. You can use it, which is useful. That is there. Lastly, I put down all the circulars that are there, which is there, which have been issued, and these are the two. Not this. If you see, there is this press release that I put here for the annual returns. Very useful press releases that you need to keep in mind when you're doing your annual return scrutiny. I think that is what is the session all about, the topic. It's been a pretty longish session that is there. I just hope it is useful to all of you. Thank you.
As we conclude the Prajna series on GST returns, we extend our sincere thanks to Shri Rajesh V. George for his lucid and structured explanations throughout the sessions. From the foundational concepts of GST to the detailed walkthroughs of returns, this series has aimed to equip participants with both conceptual clarity and practical insight into return filing and compliance.